All right, hello and good morning, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays. Got a special guest on for you today. A lot of you have been asking. He's been on the show before. And without further ado, let's welcome Phil to the show. Phil, how you doing, man?
Hi, Tone. Yeah, I'm doing well. I'm not doing as well as you by the looks of things because I'm in a rainy UK and you are not in a rainy place at all. So I'm very envious of your location. But
No.
otherwise, all
I
good.
saw, I saw, I saw your returns from the Bybit trading competition. You're doing pretty well yourself there.
Yeah. The Bybit competition was quite a bit of a laugh. Obviously, it's like quite a small size trading contest, but I think I started with like zero point 0.1 and ended up on like 0.45 or 0.46 or
Yeah,
something.
that's
So
pretty good. Did you see my video with the guy that won?
I saw it. I don't know if he actually ended up winning in the end, but I do know what's he called,
I'm I'm
Salsa.
I'm pretty sure. I mean, you know what? I don't know where to find the overall leaderboard, but he was up since then. I mean, he was at like 3,600%, but then
Oh,
he
it
was
was
like
like,
over. But then he was over 4,000 when the competition ended.
yeah, I think the winners were like 4,500% or 4,000. I think the
Oh
winner
shit! Well,
just
even if he
pipped him.
even if he didn't win, that's pretty damn good.
Oh yeah, man. I mean, insane. I mean, you have to be doing quite a few hours to be catching all the moves with such intensity like that. And so mad respect to Salsa, and also I think it was Junkie 84, or I think he was the guy who won it in the end. But yeah, really impressive, really impressive. You can't really say much more than that, can you? Other than very, very impressive gains.
Yeah, no, but look, anytime you can get away with a gain, especially on a contest like that, like at a random point in time, it's great. And you made 400%, so that's awesome.
Yeah, I think next time I'll take the contest a lot. I will approach it with a much different approach. I know that a lot of people, what they did in their teams was, well, firstly, you had a much bigger advantage if you started with more people because it only was the top 10 traders who were, well, any of the top 10 traders could have done well. So I think what some of these teams were doing was like getting as many people in, some of them maybe with like 10 accounts of zero point 0.1 BTC in it. And then they were like 100xing it until they catch one. And then whichever one of their last accounts standing is the one that sort of wins. So I hadn't really thought it through, but I think that
Right.
is an option to sort of maximize your chances of returning on it.
All right. Well, we do like Bybit around here. I believe you trade on there as well, and I have an affiliate with them as well. But let's not spend too much time on them, even though we like them, because I want to talk about what you've been up to. It's probably been about a year since you've been on the show. This is Phil's Twitter. You're becoming more and more popular. I know I'm getting more and more requests for it. And you recently launched your website. So tell us a little bit about your background. People sometimes still send me your trading view projections from like 3 or 4 years ago. It's like, wow, this guy was on the money. And I'm like, yeah, he's been on my show. You should catch it.
Yeah. So decent trader. So my background's like I'm from finance originally, so I trained as a chartered accountant for a big blue chip company. Moved into doing sort of risk management for a mining and commodities physical trader, and then thereafter kind of fell down the Bitcoin rabbit hole. I won't bore you too much with what happened in between, but yeah, so decent trader. It's basically a culmination of a lot of the stuff that you get requested for. You'll know yourself. How do I learn? How do I trade? Can you tell me more about your positions? How do I be successful? How did you get to where you are? And all that sort of stuff. Plus, also there's the long-term investor stuff, which is probably one of my specialities. Is as you mentioned, like the long-term projection stuff. Largely due to my background originally was doing big, forecasting and financial modeling. So that's kind of where I originally found my vice in the crypto land, but decent trader. Yeah, I think like one of the, obviously we've got the live charts on there, which what the other co-founders, Philip Swift. I don't know if you probably know Philip Swift of Positive Crypto, and he has come on board to help us with some of the day-to-day stuff that we do. So we've got like a hub, a community hub, where we're constantly doing live streams. I think he's just on doing it now, explaining to people about how the DeFi stuff works. But yeah, so there's that. One of the other things on the site is we're very keen to try and get people to trade properly and manage their risk. So there's like a risk management and sizing tool on there. Also a trading journal. And then also one of the big things that I think a lot of people get criticized for in this space is, LARPing and not actually trading what they're saying they're doing and just posting charts. So I've got an account literally hooked up to one of my accounts that I'm managing, and the subscribers can see sort of exactly what my position is. There's a bot that tells them when I'm entering a trade, how big the size of the trade is, and all that sort of stuff. So yeah, we only launched a month ago. Shout out to any of the guys who are watching now. But it's been great fun, like doing live trading. So we did the Bybit challenge, and that was pretty cool. Like trading every day live. So I think what I'm going to do is do like a 10x your account challenge, starting probably tomorrow actually. So yeah, and there's some educational courses and stuff coming. But yeah, it's pretty good fun. Enjoying it.
Yeah, no, that's cool. And those of you that watch my channel, and I get a lot of criticism for that, Tone just talks trading, he's not actually trading. That's actually pretty true. I'm not trading. I have other interests, mostly promoting Bitcoin. And I think that's more important in my life right now. And I just, teach people the basics, and I try to, I know this is a subscription site. We'll probably talk a little more about it at the end. My goal has always been, don't follow other traders, be like them. So that's always been my promotion from like as to how to do it. There's nothing wrong with that. I mean, back when I was starting out, I was also following other traders, but I did my best when I stopped following others and started doing my own thing. And that's the path that a lot of traders, to be successful, just have to go through. Yeah, so just a heads up on, because my disclaimers, this is, I invited Filbfilb on the show, so I am not taking compensation for it, because a lot of people end up calling me a shill. The only thing I'm trying to do is get Phil to come to the financial summit, which has been moved to 2021, because I do want the best traders at that summit, and I would love to see him there. We picked the dates for Unconfiscatable. That's going to take place in Las Vegas in April, and you're of course invited to that as well.
Yeah, I'm a big poker player, so
Oh,
I'm
beautiful.
keen to come to that. But also, I'm desperate to go on holiday. So
Yeah. Well,
I think
that was not till April. So, but yeah, put that on your calendar, man. We would love to meet up one day.
Yeah, good stuff. Good stuff. Yeah.
All right, we got to get to the charts. But before we get to the charts, let's talk about this. I woke up this morning. I was very surprised to see Bitcoin price down so much, because last night when I did a video, we were above 1,200. We were like almost at 12,000. We were about 12,100 almost. We were above 12,000. And I wake up this morning and I'm like, what the hell happened? And then here's the news. Police reportedly seize South Korea's largest crypto exchange, Bithumb. And what do you think of this? And after this, I'll hand off the screen share to you so you can show your charts. People on my channel see enough of my charts.
Well, I think Bithumb's I can't obviously comment on what the allegations are or anything like that, but Bithumb's volume, I think, is about 10% of that, relative to Binance. This isn't a Bitcoin issue. This is a possible fraud investigation. So I don't really think it should have anything really having a big impact on the price. And anyway, the Bitcoins and all that stuff in there is probably, it's basically not able to be moved anyway, I wouldn't have thought right now. So I don't think
but it's more of an indirect way, like people are panicking a little bit.
Yeah, sure. I mean, I was going to talk about it in a little bit, but
okay, I'll hand it off to you guys. Before I hand off screen share, of course, if you want to support my channel, here are my few educational videos. I should probably send them over to you, man. If you have time to watch them, then you can criticize them for me, hopefully privately, and I can fix that up on future videos. Other than that, you guys know my affiliate page. So again, if you, oh, you guys know what to do. All right, I'm gonna stop my screen share and I'm gonna hand it off to a person that's actually trading every day. Go for it, man.
Okay, cheers. Oh, I need to share my screen, actually. That would help.
Yeah, I'm coming to you guys from California.
Can you see the screen?
Yes, I can.
Okay, I mean, I was going to go through the longer term stuff first, but given what we just talked about, it's probably more beneficial to sort of have a look at what I'm talking about. I've got my indicator on in the background here. I can come back to that afterwards.
Yeah, if you can explain that a little bit later, that'd be great.
Yeah, I'll go through that in a little bit. Just a moment. Okay, so obviously we've had this big dump yesterday. I mean, I was actually in a trade long from just around 12,200. Basically, my strategy has been to play this range throughout, which has been pretty successful so far. And you know, yesterday it was beautiful. I had this line on the chart and I haven't moved it. We came back up against this sort of diagonal support, which we're having lost. Found resistance here, and it came back and was resistant. You know, we had the sort of the conjecture of the diag and the horizontal resistance at the same time. So it sort of made sense that we sold off anyway when we got there. So I took profit on my trade. I mean, I was going to try and take it in the green box, but I've got like post-traumatic stress disorder from trying to hit these boxes all the time. So I do tend to sometimes take it a little bit too early. But overall, obviously, that doesn't matter now because obviously it was the right thing to do. But the main reason for the sell-off, in my view, is that we've been closely tracking, and I mean, this has basically been my daily setup on one of my screens, is looking at the CME futures, the silver chart, the gold futures, and also the DXY, the dollar index. And basically, you can see that, I mean, I don't know if you remember when the Fed announcement was. I mean, since then, the correlation's been particularly strong. So obviously, Bitcoin's run up, silver's run up, gold's run up, and then they all dumped today, all at the same time. So what I like to look at, and obviously the dollar's gone up. So the reason why this happened was because the chief economist at the ECB said that the euro dollar rate does matter. So this is largely, or this is what the other news sites seem to think, is this is largely in response to potentially the the ECB taking some sort of monetary policy action to try and deal with the fact that the dollar's deflating, and obviously their exports are going to seem more attractive overseas. So the EU have said they may respond. I mean, it's just jargon. It doesn't really mean anything. They need to actually take action before that happens. But obviously, in my view, and I think the rest of the view of the market, that's why the sell-off happened. Now, the the line here is kind of showing where we are on gold, and I've been trying to track and silver. You can see gold and silver have retraced basically back to where they were back here before the breakout. And the equivocal place for Bitcoin's up here. So there was an overshoot on the sell-off in the same way there was when we had the Fed announcement the other day. We got an overshoot.
You're talking about the Bitcoin overshoot or gold and silver?
Yeah, so Bitcoin has overshot. So this green line is the equivocal place that silver and gold were when they retraced to where they are now. And you can basically see that Bitcoin's fallen through and gone lower than that. So what I'm sort of saying is this deviation where, because the correlation is so strong, when the deviation towards Bitcoin goes a little bit out, it shows that there's potentially something awry on the Bitcoin market and possibly an overreaction, which is what I believe.
And it's significantly less liquid, so it always like blows through reasonable levels just because of liquidity.
Absolutely, and also the Bitcoin market's heavily leveraged as well. So what we saw when we were in this consolidation phase earlier was there was a lot of people bidding at 11,500. It's a nice round number, and also it would have been a higher low. People like to look for previous resistance becoming support. But at the same time, obviously, there's liquidity levels which are here, like these wicks down here, and those just got run. So my view is that yes, the sell-off happened. It was triggered by the ECB and the dollar potentially strengthening as a result of the dollar index is like 64 4.7% euro, basically. So if the ECB say something, the dollar's going to change, right? And Bitcoin obviously overshot. So I'm viewing this at the moment, assuming these don't sell off, as being an overreaction and a liquidation event. So that's kind of my view, is that this is less to do with that news and more to do with this correlation.
Yeah, no,
now,
that makes
anyway.
that does make sense. I have been watching gold and silver charts as well when I do my videos, but I haven't looked at them in over 24 hours. So again, it's so hard, like because I'm on the road and I'm dealing with other stuff. But yeah, no, thanks for that overview on the short term.
Cool. Yeah. So the question is obviously what happens next. I mean, it does look like we're squeezing down here, and there's more liquidity below 11,100. So it's certainly possible that we do run the stops down here, but we have seen quite a lot of buying absorption going on at this when we've got down to the 11,000. So it's definitely a pivotal point in the market. Just for the meme is the correlation that we've got over here to this fractal. I mean, this is untradable in my view. You should, like, no serious trader is going to be trading based on something like this. But if you have a look at how similar it is to the reaccumulation that we had in the previous phase, it's almost identical in the way that we've been trading through this range here. So the question is, do we consolidate at the bottom of this range, or do we run down lower? And my response to that is, I believe because we're so heavily correlated as a sort of hard money safe haven type asset at the moment, and because we're so correlated to those two markets, for us to run down below here, we've probably got bigger problems, if that happens. But my expectation at the minute is to watch the other markets and try and work out what's going on there.
Yeah.
So
go ahead. Sorry.
As I say, that's basically my short-term view. You can also see that the futures premium is starting to turn negative as well. So we may have shaken out some weak hands, but this is work in progress. You could argue that this is a head and shoulders still as well, and we're going to end up down testing the 10,000s, which also could be quite reasonable.
Let's talk macro a little bit before you go on to those higher level timeframes, because if the ECB is going to react to the dollar by printing more money, this should be good for hard assets. Now, I know that commodities like gold, silver, oil, and Bitcoin, they're denominated in US dollars. Like, I remember having these arguments back in 2015 when people are like, Tone, you're an idiot. 80%, 90% of all the volume is in China, so the currency that matters is the Chinese yuan against Bitcoin. And I was laughing at that, and I said, no, the only currency that matters is the dollar. First of all, that volume was fake, and I knew it. But even if it wasn't fake, the currency that matters is still the dollar. So I understand that the dollar could be rising because the rest of the world is saying, screw you, the US. We're going to print more money than you. And it's basically the stuff that Jim Rickards have been screaming about for 10 years, but he always thinks that the end of the world will happen yesterday, but it never does. But the concept of it is correct. So if the dollar is now rising, yes, dollar-denominated commodities should be falling. However, the bigger picture is that more countries around the world are printing more money, so speculation in these assets should outweigh the dollar increase of the assets. So this should be good for Bitcoin once this initial, panic settles down, maybe in a day or two.
I think that's absolutely right. I mean, ultimately, this is showing this is a dollar pair. It's like trading against anything against the dollar. If the dollar, as you say, if the dollar strengthens, the other side of the equation is you get a weakness. So yes, that is true. And also, correctly, I totally agree that if there's more money printing, then it should, in theory, mean that the overall, these assets will appreciate relative to everything, which is largely why you're seeing Bitcoin making our all-time highs in lots of different currencies. And it's sort of like an only matter of time, personally, in my opinion, that this will follow. There's a big debate about inflation at the moment, and actually in the UK, we're actually seeing more like deflationary style events going on. For example, like eating out. That's getting subsidized by the government, and the actual net realized price for the businesses is a lot lower because they're trying to get the volume to get people out again. So it's a bit of a strange one. And modern monetary theory sort of states more printing actually goes onto the balance sheet of the banks, and really in reality the only real way that money's now created these days is when the banks loan the monies out to the people in the economy. So I think there's going to be a lag in the inflationary effect overall, but I totally agree that this is all good for Bitcoin. It could be that the metals have run away already a little bit too much, which I was going to show a silver chart. So silver's a good one because this is the monthly chart for silver, and obviously it's skewed for inflation, so it doesn't really make that much sense. The all-time high over here is a lot higher than it was, back in 1970, 1980. The real all-time high was a lot higher.
I wouldn't say a lot higher. Inflation adjusted, it was a lot higher, but it was almost a double top there.
Yeah, I might be able to adjust it for inflation actually. Forget what the ticker is. Let's just quickly do that because
I would love to also ask you. A lot of people are giving me shit about me calling silver a bit of a shitcoin.
Yeah, it is a shitcoin. Yeah, it's the original shitcoin.
Excuse me, guys. I tried to mute, but that didn't work.
Yeah, it's the original shitcoin. Like I've got a little bit of silver, but it's a very slow moving thing, and like literally it's a coin as well. So,
it wasn't a shitcoin pre like 1940, 1950, but it just became a shitcoin in the last 100 years because of technology, that gold no longer needs a micropayment because of tech.
Right. I'm not an expert in this market. I can't really speculate too much on that sort of stuff, but I think it gets used in certain things such as like solar panels and bits and pieces like that.
Oh no, it's an awesome industrial metal. But anyway, maybe save that for later. Let's talk charts.
Yeah. So the worry about the silver chart. I sort of tweeted out yesterday. I did actually call the absolute bottom on silver when the whole sell-off happened. So you can go and look at my Twitter. I did do that. But anyway, it's running up towards the 61.8, so this $35 level, which is an obvious place for it to take a breather if it does keep going, because we've got all of this monthly resistance over here, and also
I'm selling all my silver bars at $35 if it gets there, because that puts me in the green on all my silver buys throughout the last decade before I became a Bitcoiner.
Oh, nice. I think I bought most of mine sort of in here. But anyway, that was probably more due to luck than anything else, to be honest.
Yeah, see, I was buying like before Bitcoin. So, in the early stage of Bitcoin, so I was buying like 2014 area. So 2014 is when I bought the most of my silver, and so that was around $20, 2022.
Yeah, a lot of people go down the same sort of rabbit hole. I got interested in the precious metals before I got invested into Bitcoin,
right.
because
Same.
Yeah, it's just that's the way it's meant to be for as hard asset. Sorry, I'm gonna have to have a look at what's going on with the dollar here. So we are getting a bit more of a sell-off. So yeah, but overall, the 61.8% retrace back to $35, nice round number. All this old historical stuff going on over here is kind of where I'm expecting it to have a serious problem. But if you look how far above it is above this is the 20-week moving average, the 100 and 200. It doesn't really, it's never really deviated from the 20-week in its entire history. And that's a problem it obviously states to me that this thing's potentially way overvalued. So I totally agree with the fact that all this money printing is a good thing, but the problem is that actually these things may already be slightly overvalued because everyone's panicked, bought into them. So who knows what's going to happen? But I do agree totally that we should see the net beneficiary being the hard assets.
And when people like myself and Phil, when we sell our silver, it's not like we're gonna sit on it in dollars. It's going into gold or Bitcoin. Like it's
exactly. I mean, the other obvious thing you're looking at is the silver to gold ratio, which I know you look at as well. But that sort of topped out at like 125 ounces to an ounce of gold. And I'm also looking at if we get down into the 50s, that's when I'd flip into, or I'd take like a hedge like position, certainly a long-term hedge, long gold, short silver from that point, because I think it would be a good hedge trade there. If I don't sell my silver, I'll at least hedge it against the gold at that point. So yeah, so that's my general. Well, I don't know how we got onto that, to be honest. We're talking about the this stuff, weren't we? So hopefully we'll see the dollar pull back, and it'll continue this rather horrid. I mean, if you look at the dollar chart, really, the dollar chart is not a pretty thing overall.
I've been historically bullish on the dollar. I mean, I've been bullish on the dollar for as long as I've been a public person. I've been bullish on the dollar for almost a decade now. And I'm still waiting for the euro to break apart. And I know it's, I don't want to sound like Peter Schiff here or Doug Casey, who's been wrong for 40 years, but I'm still bullish on the dollar versus the euro. I just can't see Europe taking over.
I totally agree. I mean, the dollar's, America's got its own problems at the minute, right? We'll probably spend the rest of the time talking about that, but let's not do that. Yeah. Ultimately, the European Union is going to be weaker than the States because it's difficult to come up with something that one size fits all for all of those economies. I know the state is, by definition, lots of different states in its own right, but overall, you've got, I think it's easier for the America to defend their position, particularly against the they have the petrodollar. So if currencies start to implode, I think what we'll see is similar to what we saw when we had the great 2020 collapse and subsequent bounce, which was everyone rushes into the dollar because they need to pay off dollar debt. So I think that's most likely what would happen is everything else will crumble, and then the dollar will be like the last one standing, and then everything has to, unless of course China and Russia or something get together and try and do something else with oil and debase it off the dollar. So I tend to agree that the dollar's probably the best place to be overall, although I was reading earlier that people were saying that the dollar's still going to continue down for a while. So the dollar's most, the biggest, tends to be like with everything, the biggest one tends to be the one that wins, right? So I mean, I don't know, I haven't got too much to say about this side of it.
Let's flip over to like the daily and higher level time frames of Bitcoin. I think that's the most interesting topic we can get to. But I do have a good question for you from the live chat, saying how do you differentiate when it's a trending market and when it's a ranging market?
Well, it's a good question. You can largely tell that due to things like moving averages. If you've got a breakout and all of your moving averages are starting to move to the upside, then the market's going to be trending up, obviously, or down, depending on how strong that trend is. But at the moment, it's pretty obvious that you get a breakout of a range that you've been in, and then you'll have a big sell-off, and then you get something like this or something like this, which kind of defines the end of the move. And then you get a run up and you find resistance, and then you've got a very clear defined range at that point of consolidation. So once we get out of here, in my view, we'll be back to a trending market again. But as it currently stands, where you've got clear points of support and resistance, This is very much a sideways consolidation. Also, volume as well is obviously very important. If volume breaks out, if you see something like this over here, then it's probably a breakout volume, same as over here. But when it's just volume declines within a consolidation by definition, so this is obviously ranging for now. I will just mention I've got a couple of free indicators on my trading view. If you go and have a look, this is a consolidated view of the spot Bitcoin volume. So it's a lot more useful, in my opinion, than just looking at a particular individual exchange. So just might as well and this is also spot OBV as well. So just a couple of freebies there if anyone wants them.
You built those.
Yeah.
Okay, so people can just look for your name in the indicator section.
Yeah, there's quite a few things there actually I've done over time. So I don't know whether people find them useful or not, but I've got a couple more that I'll mention in a minute, which I do tend to just knock something up and then release it if it's sort of.
For the consolidated volume view, what exchanges do you use?
Oh, so I admittedly don't use so much the Eastern exchanges, but it'll be mainly Binance, Coinbase, Kraken, Bitstamp, yeah, and can't think any other ones off the top of my head, but I think it's actually written out specifically in the volume thing there, so people can go and
cool.
check that. So yeah, so we're ranging at the moment. Obviously, this isn't a very nice looking candle. It's not dissimilar to what we saw over here, right, where we sort of try and break out and get a rejection. It's all a little bit muddied by this correlation thing going on at the minute. So yeah, I mean, overall, I'm not showing this here, but if I'd spend a lot of time looking at volume, and that's where I find a bit of an edge in the market. And you can definitely see that there's still people interested in buying Bitcoin or accumulating a long position at these prices.
Right, because the BitMax funding rate, I'm looking at the BitMax funding rate on your chart, and I would have expected it to swing the other way here today.
Actually, the funding rate's not very useful unless you look at it on the 15 minutes. That's just one watch out there. So you can see it's actually, so I don't know why that is. I don't know what the code actually tells you, but the funding rate at the minute is pretty flat. It's like 0.015. Whereas earlier on, the premium index was up at like 0.11. So, you don't have to scroll too far back to see where that can become problematic in the market. And actually, when we sold off today, as I sort of mentioned before, what actually happened was in this area here, there was a lot of buyers and the funding rate really spiked quite high. And that obviously means that a lot of people are trying to get long, and that's probably not going to work out well. It was not a good equation. So that's kind of how you can use that indicator. There's lots of different nuances that you can sort of bring into play with it. But yeah, so generally on the daily, we really don't want to be closing below 11,300. That would be pretty bearish, to be honest. The bigger the wick that we can try and get out of here, the better, really. The key levels that I'm really looking at, I may as well go on to the bigger chart now, is the 11,500 level is this previous weekly resistance. Very, very few periods or weeks have taken place above that. So obviously we had the 17, 18 final blow off top. And then other than that, really all we've done is had resistance with it, other than the last few weeks where we've managed to keep our heads above it. So that's quite a critical point. If we can't regain that on the weekly, I'm going to be a little bit concerned. It's very similar to the 9,200 level, or 9,150, sorry, that we had back in this consolidation. That was a very, very important level that we managed to keep. And I see the 11,500 level as a similar thing at the moment. But obviously everyone's interested about the CME gap, which to me is just another meme. The gaps, they need to be filled. Yeah, that's right. Is that right? Well, by definition, not really. There's no real reason. I think that there is actually a reason that they need to get filled on a short time frame, because there'll be traders who've got positions there, right? And they're incentivized for the price to come back to that missed trade that they may have been in or that they want to close out. So I can totally understand that. But I think the longer the period is away from that, the less important it is. And if we wanted to get picky, there's arguably a gap down at 3,200 or 3,400, whatever it is down there. And if you're a true believer of that, then really the CME should have closed that gap when we had the auto deleveraging event in the coronavirus sell-off.
Yeah, no, I'm 100% agreeing with you. I don't really care for the CME gaps, because the CME needs to get on with the 21st century and open their futures. Right now, they're open 23 hours a day, but only 5 days a week. They need to do that 23 hours a day, 7 days a week. I mean, it has to. If they're going to trade Bitcoin, they have to do it. It's just dumb to close it on the weekend.
Yeah, there's no reason why not to do it. It's supposed to be a futures market, right? So why wouldn't it be open all the time? And it's just more fees for them. So I don't know what I have absolutely no idea if there's regulatory stuff behind it or overhead costs and all this sort of stuff. But I think over time, why aren't markets global anyway at the weekends? I don't really know why that would be, other than traders want to have some time off. That's the curse of the Bitcoin trader. You don't get any bloody time off. So yeah, they're lucky, those guys, but probably not when they come back to the office and Bitcoin's done a massive pump and they've been left behind. But you'd think they would be risk mitigating that sort of stuff anyway, if they can. So
I'm sorry, I got an audience question for you, and it's do you pay attention to like large orders? So here's a question for live chat. Thank you, Andreas, for your super chat. Someone put 24 million Bitcoin contracts on BitMax to short by market order. I guess that's why Bitcoin dropped. A lot of longs were killed. Do you know about that? Do you pay attention to those kinds of announcements? I think there's like a Twitter or like a Telegram bot. I think it was like Whales or something, or one of those wrecked accounts.
Yeah, I mean, I do follow that stuff very closely. I didn't notice that one today specifically, but that'll have just been someone chasing the market down, knowing that there was liquidity below. I would have thought. I very much doubt, unless that was someone getting stopped out, which would have been pretty unfortunate for them. I do pay it. I mean, the problem with orders and people showing their hands on the book, things like a market order, I mean, obviously that's useful because someone has actually transacted, but orders on the books often are there with the very opposite intention of why that you think they might be there. So if someone's got a really big buy on the buy side as a limit order and they're just chasing the book up, it's normally to try and fill their short position. So there's a lot of experience, probably is the right word, with all of this stuff, and it's also situational as well. So I do pay attention to orders, but to me that would have just been someone possibly doing the stop hunt, either that or they're really, really sure that this thing's going to come down. Without all of the information, you just don't know.
All right, so let's move on.
Okay, so yeah, the gap, I find it interesting. The likelihood is we are going to fill it. Do I think this is the last time we'll ever retest 10,000? Well, if I said that, it would be definitely a devil's curse. I certainly don't want to say that. But I think we probably will retest 10,000 at some point. To suggest otherwise would be going against the whole market and what we've done in the history of Bitcoin so far. So I do think it's possible. But having said that, I don't think that this is really quite done yet. If you have a look at the pivot points on the chart, we've got the yearly resistance at R1 up here, and also the 61.8 retracement level off the old 18 bear market, and also people like to call this the golden pocket up here. As well as that, we've got this monthly resistance and also this wick over here. So everything tells you around 14,000. In the past, we've experienced like severe volatility in the market. So I think it might be a little bit naive to think that we're just going to go straight. If we do continue up, that we're just going to continue to all-time highs without some sort of major retracement. Well, that's my view of it anyway. And it would be probably quite a healthy thing to do, just to back test the support at that level, having spent so long getting out of it. I would be concerned if if we start closing on bigger time frames below this 9,150 level, which we took so long to get out of. If we couldn't hold up there, there would probably be real concern. We could wick below it and take out some liquidity there, but it seems less likely at this point than likely. Other things that Bitcoin likes to gravitate towards its 20-week moving average. I mean, by definition, it's a moving average, so it's going to do that, right? But you can only get there either by reversing in price or by time with the 20-week catching up. And what I'd like, if you force me to say what I think might happen, assuming gold and silver keep doing their thing, I think we could do something. It'll probably be more severe than that. We could do something like that and sell off quite fast. And I think the 20-week moving average is also quite important because, well, for the reasons I've stated, if you only have to go and look back through time. I keep doing that. You only have to look through time to see. I don't know why I'm doing that. That we keep reversing to the 20-week moving average, and they're always like typically great buys for Bitcoin in a bull market. So there's debate over whether or not it is or isn't a bull market quite yet, but the key things are there to sort of suggest that it might be a bull market. And by that, I mean, we're above the 20-week moving average. We're above the 100-week moving average, the 200, well, actually that's the 100, but yeah, the 50, 200, 20 and 100 moving averages, and they're all stacked the way they should be, 20, 50, 100, 200. So that to me suggests, actually, if you go again back through time, the last time that happened was over here, before, while we were consolidating, and then they all realigned, and then we eventually broke. That was actually here is where that happened. So that's kind of historically saying.
Yeah, that area you're pointing to was the pre-halving and the post-halving, the pre-halving pump and the post-halving drop.
Yeah, so we halved on the 7th or 9th of July.
July 7th. Yeah, July 7th.
And then this was Bitfinex hack here, wasn't it?
Yeah, possibly. But it pulled back perfectly. I mean, I was to the breakout area. That was good. Yeah, I agree. I've been saying how we are in a current area as well to that. And I also completely agree with that thing that you drew. I've been saying for weeks now that I think we can go to 13, 14,000 and then pull back to 10,000. And that would be the last time you have a chance to buy below 10,000 before things ramp up next year.
Absolutely. I mean, to be honest, I've been so busy. I didn't just copy that, but it's good to hear we're on the same page.
I don't expect you to. Like, again, I don't expect traders like yourself to ever watch my show. I don't expect even my own followers. You watch my show for a while, you learn how to trade, and then you probably maybe catch it once every few weeks. Like that's the plan. Like I want to teach people to be fully independent.
Teach them to fish. On anyone.
Yeah.
Yeah, I think it's always useful to get other people's opinions, but particularly with trading, as you sort of alluded to before, that you can be completely swayed. I mean, I still get swayed by stuff. I was going to say shit. It's probably a better word that I see on Twitter. So it really can sometimes make you like twitchy and doubt your own analysis. But I think as you sort of mature as a trader, you should have a system that's just you can't argue with your system, and if your system tells you that you're right, then well you can always double check why afterwards and make adjustments to your system. But while you've got your system and it works for you, you shouldn't really be looking at other people's analysis. Is very much what I'd agree with. So the 20-week at the minute's like back at the CME gap, roughly. So it'd be a great bit of narrative that we've closed the CME gap, tested the 20-week now and bounced off. So could happen, and particularly if we see that weakness that I was talking about, I could definitely see something like that occurring sooner rather than later. But my narrative for now is that we're consolidating until proven otherwise. Other levels that are important on there, the daily moving averages as well. So I'll take the weeklies off. So the dailies are all showing that we're stacked the right way again. Presumably that's the 50. So the 50 is coming in and testing now. So that's what everyone's probably going to start talking about as well, the 50-day acting as support. So yeah, so the moving averages are all down here ready to be tested should they need to be. So yeah, that's the overall sort of view of the market. I guess I could talk a little bit about my indicator and how that works, because I talked about that before. So
yeah, go for it. I'm curious myself.
So I did have a different version of this, but continual improvement and all that sort of thing. And all the people who did actually buy it, the previous one got upgraded for free to this one. And basically, I like to use a color candled system. And well, I'll take off the components here. But effectively, the way that it works is the bluey green candles are basically driven by volume. And then the green is like some of the secret sauce, but effectively like moving average based stuff to try and get you long. So what you do is you would take the turquoise stuff tells you that this market's starting to turn around here, and then when you get the confluence with the price action and the trend starting to change, then you can start leveraging or increasing your size of your position, based on however you want to do it. The white dots, which you can see, are basically things that try to deal with price action going sideways in a range, so you don't get shook out of your position too soon. So that's also a feature within it. But again, I mentioned, this thing uses volume, so you can use the combined volume in here to effectively make sure that you've got consistency across exchanges, because obviously if you're just looking at one exchange, it can become problematic if there's really big volume on, let's say, Bitstamp, but then not so much on the other exchanges. You'll get the wrong signal within this. But obviously yesterday it told us to get out at 11,900. So what I look for is this key stuff is when you start to see a reversal in the volume, like up here, and then either you start easing out of your position or you start getting short, depending on, again, how you view the market. I've also got some dynamic stop loss stuff in there as well. So you can sort of use this to drag your stops along with you as well, should you so wish to do. So yeah, that's generally how the indicator works.
All right, so I got questions. Wait, go back,
yeah.
go back.
Okay.
All right. So you are so there's only three colors that show up. You have the turquoise, the red, and the green.
The red, there is actually a lighter color red here.
Oh, there is a lighter color red. I'm sorry, I can't see. I'm outside and you're on a black background, so I didn't even realize that, because I can't. It's hard to see that difference. So my question is, you are looking at this on a 4-hour time frame. Is there an ideal time frame for this? Did you build this for a specific time frame? So how should people use this across time frames?
These specific settings on this version of the indicator are specific to one time frame settings. However, I'm going to update it. Well, you know what it's like when I get a chance. Next 2 days, I have got another version where I've made it so it dynamically changes the settings based upon the time frame. So it's like I've basically worked out the optimal settings for each time frame. So when you flip it, you don't need to adjust the settings or anything like that. It just automatically changes them, and then I'll forward test that as we go. And should there be like a big deviation in there, I'd change that as required. So there'll be the option in the next sort of few days to be able to keep it either as a fixed basis on the fixed settings, or optimized. But the thing is, you can go and optimize these things to the nth degree, and realistically, the setting, for example, the MACD, it's got universal settings on it. And you should be able to come to some settings with your indicator which works cross exchanges, cross assets, cross timeframes, which work well, like the MACD works. So that's always my response to that is, yeah, it's great to have individual timeframe stuff, but try and get what's best working right as well. So
Right. Can I steal screen share for 1 minute and then I'll give it back to you?
Sure.
I know like my own audience are going to be very, very pissed. But the reason because you were looking at a 4-hour chart, and just before we went live, I glanced at my 4-hour chart. That's the daily. And here is my favorite indicator. I'm building the MRI to kind of make it more unique with my stuff. This was prior to that, I was using a sequential. And there's my arrow right there on the 4-hour chart, same time frame as you would have called the very top last night fairly well as well. So different indicators, completely different. This doesn't care about volume. This is just all momentum based and based on prior candle closes. And there it is, called the top as well.
Sure. I mean, I used to use it. Well, I still do use occasionally your TI indicators stuff. It's really good.
Cool. Awesome. Yeah, I can't wait to like release this. Hopefully this month. Just everything just always moves so slow. I don't know why. It's probably my fault.
Yeah, so I do go into more details how mine works. I've got a YouTube channel. I don't really post much on there, but I've posted a video that explains it in a bit more detail, probably than I've probably poorly managed to explain it there.
Give me like 30 more seconds. I just want to glance at my own charts and see what's going on. Here's the daily. This is pretty bad to me. I know you mentioned your levels were 11.5, above 11,500. You're fairly bullish. What was your like fear level at the bottom? Because for me, anything that was coming in below 11.4, anything below this line, I'm pretty bearish, and that's my 11.4 line, a little bit above. And anything above 11.6, I was bullish, but on a different time frame. On this time frame, that's like 11.9, but I'm not sure why. But like 11.4 was my major line in the sand here.
Sure. I mean, a daily close below the previous lowest daily close would, is typically a bearish thing. So
like for me, this would be a 2-week low close, and that's not good.
Yeah, it's not good. You want to see, big wicks and quick reactions coming out of the demand zone or the bottom of the range. And we have seen some reaction there, but as we know, the DXY looks like it's topping out a little bit actually now, and gold's still selling off. So my view is that gold's still selling off. Silver's actually stopped a little bit, but gold coming into resistance now is sorry, the dollar coming into resistance is probably what we need to see to try and reverse this. So those 4 charts are printed, on one of my screens all of the time. But overall, the crypto market, as we've been saying, it's where it should be in the cycle in terms of both retracement to the old all-time highs after the bear market. It's also the on-chain investor stuff. So you can look at those charts on our site. They all tell you that people are holding the coin. There's the 1-year hodl chart that just shows that people are holding the coins for.
Yeah, you wanna go to that? Do you have that chart?
Yeah, I've got that. Where were we? So, I mean, this is largely the work of Philip Swift, and we do have some unique stuff on here, which isn't yet released to the public. I know he's talking about this. He might be a bit upset if I steal his thunder, so I won't do that with that one. But yeah, the 1-year holding hodl waves is based on UTXOs, and it's showing you that the people holding their Bitcoin for 1 year or more is currently at 63% of the total supply. So this is based on supply rather than adjusted for supply, as opposed to just like total number of coins. And in the last cycle, we were pushing back up through having made a bottom. So we're exactly where we should be with that. And then obviously, as I say, I won't go into that one, but lots of different things like the investor tool, the 2-year moving average multiplier, we are where we're sort of the same sort of distance away from the moving averages that we would expect to be at this point in the cycle. The Puel multiple, this is also telling us, I mean, this is a really interesting one,
I haven't
actually.
had him on the show in a while. Should probably bring him in.
Yeah, I haven't spoken to him in a while, actually. I should catch up with him. But this is a really interesting equation. I won't try and bore it too much, but it basically looks at how much the realized value of what the miners are getting is worth versus what it was within the last sort of 365 days or something like that. And it's kind of showing that it's quite low now. So you buy it when the miners aren't going to be getting paid as much as they have been previously. So it picks the bottoms really nicely, because obviously that creates the disincentive in the market for the miners to dump their supply, and it'll potentially get rid of the weak miners, and then they can start potentially holding onto their coins a little bit more and let the price run up. So again, that's pretty low. We've got a long way to go with that. Actually, what's interesting with all this stuff is there's so much data here, and they don't move very fast. So what we're trying to do on the live charts bit is create a dashboard that just specifically shows sort of how far through the cycle are we, as opposed to, relatively, as opposed to like, oh, it's finally got to the buy zone, which is really good information, but it's a little bit difficult to interpret, because if it's in the buy zone and you just went off this stuff, then potentially you've missed the boat and you're never going to get back in. So the key thing is, how much as an investor have you got? How much time have you got to get to realize that ROI? And particularly in a parabolic phase, that's very important, obviously. So yeah, but I mean, overall, everything, if you go through all these charts, everything tells you that we are where we should be.
So is this all public somewhere?
Yeah, this is just public on the Decent Trader site.
All right, cool. Hey guys, go over there, check out the charts. Like, I really like when people come up with these creative ideas for long-term charts. Maybe not too creative. Sometimes you're looking at it and it's really out there. But yeah, give us your longer-term outlooks, because you've done some good stuff back in the last bear market.
Yeah, the long-term view, it's funny actually, I think you've said this yourself, like it's a bit of a fool's errand trying to forecast the price of Bitcoin over a long-term time, because if you hit lucky, you're really right. If you get it wrong, well, it's just another guess, finger in the air sort of thing, isn't it?
Yeah.
But
well, I became a bull. Like I was a bear, and overall, like on the long picture, I was a bear. I know what day I became a bear. It was like January 12th, somewhere January 10th, January 12th of 2018. I became a bear, and yeah, I was waiting for 2000. We only got to 3000, and I became a bull on March 13th, 14th, the day that crash happened. And I've been a bull ever since then. And I think I'm planning to be a bull for a few more years until I see a real top, which we're going to talk about. So what's your overall macro picture? Are we in a bull market? How big do you think it can get?
I definitely think we're in a bull market based on all of the information that we have, which is the on-chain stuff telling us that investors are buying and holding the Bitcoins, the fact that the amount of Bitcoins being held on the exchanges is declining. And overall, the economic environment suggests that hard assets are a good place to be, at least for the near term. So another positive thing for Bitcoin is that you might also class it as a bit of a tech stock as well, in a way, and particularly the crypto space overall. So, I think that's probably still got some room to run as well. So I think the narrative for where we are is correct. I do like this one, the 2-year moving average multiplier, which Phil's got. That does really well at picking the tops. And that would sort of say that if we did have a mega run up now, so if anything over 38,000 would be, would be overbought at that point. In terms of the full cycle, the end phase of the market, Bitcoin went up from 10K to like 20K in a week or something. I don't know what it was, but you can gain 100% of your value on thin air very quickly. And so, we all talk about sort of 100K as being this round number. Well, that could be
Yeah,
very.
I was gonna mention Plan B's stock to flow model, which is calling for 100K within the next 3 to 6 months.
Yeah, it is. Or was it? I think that I actually had a. Well, actually, we do have the stock to flow model on here, so I really should look at it. By the way, all of this stuff on here at the moment is done by Philip Swift, or he's interpreted other people like David Puel's stuff. So
Yeah,
I
let's
don't
bring
want
him next
credit
time
for
you guys. Next time you come on, bring him on with you.
Yeah. I did mention to him that we should do that, but he was actually doing a live stream on our site at the time, so he couldn't make it. But yeah, I mean, there's a lot of debate about this stock to flow thing, and
no, I think it's fine. People misunderstand what I say about it. I just can't. I find it bothersome that people try to use it for short-term trading. It's not what it's for.
Oh, it's definitely not a short-term trading tool, but and also there's a lot of debate over the coin integration. Statistically, it's been proven that. Well, I'm not a statistician, so I don't want to start getting into a fight over this sort of thing. But I think cleverer people than me who are good at statistics have sort of debunked the relationship due to time with this thing. But I've done the calculations myself, and it is definitely is what it is, and obviously it works for gold, silver, and all these other assets. So do I think it's just going to run up like that? I think what's this saying here? It's saying by May 21 we might get to 100,000. I thought he'd done another version where it was only 50 actually.
This is the latest one. I believe it's updated, but it's now moved up to 100. But it went further in time. That 50,000. I think I don't hold me to this, guys. I think the earlier version that had 50,000 had it earlier, and he had made an update into this one like a year ago or something, or like within the last 9 months.
Yeah. So again, when things are fundamentally changing like that, without understanding why they've changed, 2x change is quite big. So I don't really know why that's happened. And, I've spoken to Plan B in my time. He seems like a good guy. And I really like this sort of analysis. All of this sort of analysis is great. And you find it in the Bitcoin space specifically because, A, we're all a bunch of geeks here, right?
Yeah.
And there's just data's just dripping off the seams of this thing. We've got the ability to see what's actually getting shifted around on the around the actual network, which you can't see how much gold's getting shipped around, and is it getting shipped around, and does it exist? So without going into that whole Bitcoin gold narrative, just overall by definition, people like to look at this sort of thing. So I do think it's useful in the fact that it's been useful in the past, and everything's useful until it isn't. So I don't know, and it is following what it should be doing. So I don't want to sit here and say that I don't think it's going to do that. And to be honest, I do think that we could. My upper end of the next bull market, sort of like 250-ish, 220, in the same way that we went to 10K. We would need to get to 200. Would get to 200K, but there's a lot of other things that need to happen for that. We need to see a lot more people transacting on the network. I don't think we've put in an all-time high on transaction fees on the network. And I know we could start talking about batching, and I don't believe many people. I don't know anyone who uses Lightning, but potentially Lightning having an effect. I wouldn't.
Yeah, we're trying to change that. I want to do a little workshop on how to use Lightning because I don't even freaking use it. So at Unconfiscatable, we're gonna try and do a little workshop to teach people how to do Lightning, and understanding Bitcoin conference is really gonna push. Like anyone that's coming to understanding Bitcoin conference and leaves without being comfortable using Lightning, then we failed.
Right. I mean, that's great. And, it's great what you do in the space with like actually trying to get people to understand what this thing's all about. It's horrible that people are just speculating just purely for the financial gain. Well, when I say horrible, not horrible if it results in my net asset value going up, but, yeah, overall, I mean, the chart sort of saying that it tells you that you overshoot this thing. So the actual value is sort of like an average, isn't it?
Yeah, but overshooting that, I mean, we're talking like 150K a Bitcoin. And as
Yeah.
much as I would love to see that before 2023, I mean, I would love to see it, but I think that's a little unrealistic. And I just
I
think
agree.
the
I mean,
overall market cap of Bitcoin is so much larger now that moving it becomes a little bit harder and harder. And
it's all about the volume that's required to support the price and the amount
yeah,
of buffer that the order books would be just like vaporware at the minute if they were trying to get it up to that sort of level. So without like major money pumping into this thing, retail aren't going to be able to get it up, so to speak, to the same extent that they did last time when the market cap was a lot lower. So
but it would
things have
also
got
be
to change.
interesting. It would also be interesting to see, because someone else put in the statistic that Bitcoin tops usually soon after a 10x day. So what I mean by that is, so in the last Bitcoin run up, or let's go to like back in the 2013 Bitcoin run up, once we had one or two uh, $100 days where the price of Bitcoin went up $100 on its way to $1,000 top, and then in the last one, in the run up to 20,000, we had $1,000 day where in 24 hours Bitcoin goes up $1,000. I think we had like two of those, and someone else was saying that Bitcoin will top the moment we have a $10,000 day. So that could be from 40 to 50, or that could be from 90 to 100. But some people are waiting for that 24-hour period with a $10,000 rise in Bitcoin.
Yeah, I mean, that does make sense, but really it's describing a blow off top, isn't it?
Right, exactly.
So yes, that does make sense. I mean, I would say it might be as big as 20K on the basis of, it was going 1K last time. It was previous top was 1K, and we got to 20. So it could be a 20K day. Who knows? Who knows? We may never get there. But as we've sort of said, the macro picture supports us getting there. Institutional investors are undoubtedly more interested in this asset. You've got people like Paul Tudor talking about it, and all these products are getting built for a reason. They aren't building it because Bitcoin's going to zero, are they? They're building it because they think the volume's there to make money going forwards.
Well, it's not just the institutional investors. Yeah, Paul Tudor Jones is an institutional investor, but now we're seeing corporate investors, which could be even more important because they have a longer time horizon on their hodl than an institutional investor. Like when MicroStrategies bought $250 million worth.
Right. I mean, the more people, it's interesting with this thing. The network effect is deeper than just what happens on the network. There's just more people that hold Bitcoin, more people who know what it is, the longer it's been around. I can't remember. There is a name for this. Murad used to talk about it. Can't remember. What's it called?
Oh, like the Lindy effect? Yeah, the Lindy effect. Yeah, the longer something's been around, the more like its lifespan like expands.
Exactly. It gets more credibility, and I definitely think that's underhand here. And there's debate over whether or not the cycle needs to be longer this time. I don't actually buy into that personally, because you could argue that the market will get more efficient at pricing in where it should be, and also what I said about the volume. Well, maybe some guys are just going to like plug in with like 200 million bids on the bid side. I don't know, and it's very difficult to know what's going to happen there. But it does sort of show you that tracking the volume and the bids and the coins coming off the exchanges, all of this stuff, the amount of time people holding the coins for, the supply and demand long term, is really sort of going to be critical to making sure, like on a in finance, you have these red, amber, green reports. It's like the scorecard needs to sort of be, what's the demand side? Is it going to be telling us that we're still going up? Supply side, are miners selling their coins, moving them to exchanges, or are they taking them off exchanges? And then overall economic environment, macro stuff sort of tells you that we're in a good place. So as we go up and as we go higher and as market cap gets higher, it's going to be harder to get up here. Do I think we're going to get to 1 million a Bitcoin? Well, I did do an analysis actually like a couple of years ago, which sort of tried to work backwards as opposed to like work forwards with a price just based on a chart to sort of say how much of global debt, for example, would we need to capture to get Bitcoin to X price. And it definitely did suggest that, I can't remember what the figures were now, maybe I'll share it later, but that financial model showed that you could get to £1 million a Bitcoin quite easily just by capturing a small amount of global debt. And that's where the long-term aspiration is. I think, again, ages ago, I had a look at the price of Bitcoin relative to the gold market. So for Bitcoin to get to the size of the gold market, I don't know what it is now, and I don't know what gold was then, but it was Bitcoin would be like 300K or something. So it probably needs to be like 400K now that gold's doubled since around that sort of time. So if Bitcoin's as big as gold, it's going to be in the 300,000 to 400,000 level. Could it get as big as gold? Well, I think that's the way that, the millennials, particularly, I'm one myself, regrettably, only just though.
Well, yeah, if Bitcoin plans to be a global player in as money, it has to be way bigger than gold.
Yeah, well, absolutely. Yeah. I mean, if it just became as good as gold, pardon the expression, then yeah, that would be a success for me for Bitcoin. We're going to see a big transition of the boomers at the minute are going to start dying off, unfortunately, and the millennials are going to start taking the
COVID is slightly speeding that up.
Yeah, well, allegedly, but I don't want to go
Yeah.
there. And then so there's going to be this transition from the boomers to the millennials, and to, I think, it wasn't Charlie Lee, I forget the other one, the guy from
Bobby.
Fundstrat. Bobby Lee, yeah.
No, I'm sorry, that's his brother from Fundstrat. That's Tom Lee.
Tom Lee. Yeah, lots of Lees there. But Tom Lee did a really good video. I don't know where it is online, just explaining Bitcoin and how there's going to be this generational shift as to who's at the helm of investing. And those investment managers who are millennials are going to be getting to the point now where they're really firmly in control of what's going on, and they're going to understand this, whereas people like Buffett, who doesn't understand hard assets at all, or allegedly he's bought some miners now, but gold miners, but those guys have, the dinosaurs, and you can, I mean, good luck trying to explain DeFi to them. But
good luck explaining. Look, most people don't understand DeFi at all. And but here's the thing, right? It's one of those things where you think you're like intellectually inferior by not understanding DeFi, and I've said this before many times. You're not. Some things are not meant to be understood because they're just stupid. And just because some guy thinks he understands DeFi doesn't mean that he actually understands it. Sometimes the right position is, this is dumb. I'm not meant to understand it because it makes no sense.
Yeah, again, traditional finance sort of from the book, you wouldn't find a DeFi in there. Obviously, we're trying to change that a little bit with how finance is done. But in terms of making money, well, hell yeah, there's a lot of money to be made in DeFi and farming and all that sort of thing that's going on at the moment. And if you understand it and you want to do that, fill your boots. If you've got enough risk appetite and you're up all hours of the day and you can stomach a 90% down day and a 4x up day, then all the power to you. Get in and get out is my advice. Well, not advice, wouldn't say that, wrong word to use, isn't it? My advice is always to manage your risk, and if you want to play those games, I know people have been posting astronomical returns, and congratulations to those guys who've managed to work out how to do it, because there's an intellectual barrier to even bloody take part in that thing. To have your time and energy to get involved in it is massive. I don't want to start trying to proclaim to know too much about it, because I'm very much a large cap trader, but I've definitely missed out on a lot of those gains. But as I was sort of saying to one of my friends, like Ethereum was sort of, if Ethereum sort of went from nothing to, I don't know, $10 and then back to like $5. I can't remember the exact numbers.
Yeah, it went up to 20, and then the DAO hack happened, and it went down to like $4 or $5 after that, or $8, and then it rallied hard.
Yeah, and the thing is that you can miss the 30 cents to $3 to $20, and then my sort of strategy with this market is to sort of let it fizzle out a little bit, this hype, and then see which ones are stronger projects. I know you don't like speculating too much on shit coins and all that sort of stuff, but
yeah, I mean, I hate them all because, and I hate. What do you think about this? People are so upset when they say that, well, you cost me opportunity. That's not how it works, because I also cost you an opportunity to get into BitConnect. So you can't cherry pick good opportunities versus bad opportunities. But what you can do is look at the merits of the project. And I would never advise anyone to put their money in anything in crypto other than Bitcoin, unless it's for short-term trading. And if it's for short-term trading, you need to learn how to make your own decision. That's basically my view on it.
I totally agree. I mean, you could apply this opportunity cost BS to like anything, though, couldn't you? Just,
Right.
like, Tony, you stopped me from getting out of bed earlier today.
Right. Well, my favorite one is if I was walking through a casino with a friend and he just got this feeling and said, I'm going to put my life savings on a zero on the roulette table, and I talk him out of it. And then as we're walking away from the roulette table, it hits zero, and now I'm an idiot.
Yeah, I would be pretty pissed off with you in that situation.
You're right.
But yeah, I mean, overall, it's like trading pink sheets, isn't it? So
it's exactly like trading pink sheets. I always compare it to that.
So, by all means, have a go, but my only sort of suggestion would be to try and keep it relative to like the size of your portfolio relatively small, and experiment with all this stuff. It might be good. I don't know. Just it's always good to sort of see what's going on with innovation in the space. So I don't really want to talk too much more about something I'm not that bothered about at the moment, but I am keeping an eye on it. And Philip Swift, our Decent Trader co-founder, he's been spending a lot more time looking at that. So he looks after all of the other category, and I focus mainly on the large caps. So we are still looking at it, but I don't believe you can be. I don't know how people can trade like scalping low time frames, Bitcoin and Ethereum and stuff like that, and also do that successfully while they're also like you're tripling up in a day on other stuff. So there's only so much time I've got, and mine is focused on specializing in nailing my Bitcoin account with higher leverage, of course. So
do you ever trade the altcoins or only Bitcoin?
Yeah, I mean the position tool on the site will show you sort of kind of what I'm looking at as well. So I'm in Bitcoin, Ethereum. I'm underwater a bit in Ripple and Tezos. Go and buy some Tezos, for God's sake. Yeah.
But okay, let's be clear. These are short-term trades. You don't actually believe in that nonsense.
No. This is purely to make
more Bitcoin.
More Bitcoin, yeah.
Right.
That's my overall.
Right. And I have no problem with that at all. My problem is people that buy into Ripple and now become Ripple shills on Twitter just because they have a position in Ripple.
Yeah, I mean, I don't know who these people are. I've largely stayed out of it. I've always stated that I believe and I understand what Bitcoin is. I kind of see what Ethereum's trying to be. And I don't really understand most of the other stuff. I mean, maybe I'm ignorant here.
No. A lot of that other stuff isn't meant to be understood. It's meant to just be convoluted. And I also understand what Ethereum is. And I understand what Ripple is. And I think it's insane.
Yeah, well, again, like, I've only ever invested so much time into stuff beyond sort of like the first page, where if I don't really, I sort of got what some of the coins and tokens were, but back in the 2017 run up, like, how you would buy a token and that token would be exchanged on for something like, I don't know, doing medical research or printing, using spare computer capacity and all this sort of thing. I kind of got that stuff actually, and they did really well, some of those coins. So I was invested into those, albeit in a small rate, possibly due to my ignorance. I didn't know too much more about them, but there really wasn't enough time to learn about everything that was going on in 2016, 17, because it was all just happening so fast. So at the moment, the DeFi thing is helping with Ethereum's price. There's no doubt about it. Like, it's locking up so much Ethereum and the gas fees are so high, the demand on the network's high. Ethereum's network fees are going up. You have to buy more Ethereum to be able to spend the gas, So overall, like, I hate to say it, but this sort of thing's good for the price of Bitcoin. I know you're not going to like that, but it kind of helps with Bitcoin's price because it gets attention back into the space for all the wrong reasons, of course. And
Right.
a lot of people will lose money, but it does kind of help in a way.
Yeah, no, I don't mind you saying that. All right, anything else you want to show us? And yeah, people early on were asking if we can get them a little bit of a discount on your site services. I know that's rough because it's weird because myself as a conference organizer, people are like, well, Tone, how can we get a discount to your stuff? And I'm like, yeah, but like that means everyone gets a discount. I might as well just lower the price.
Yeah, well, exactly. We do have I think we are going to do another round of potentially discounting the VIP package. We did have that at 50% off. We probably will do that again. I don't know what the intention is with that, but yeah, if you think about the price of it though, like, this is like giving away a lot of what I do, which is my edge in the market, and I don't really just want to like spill the beans on Twitter.
Yeah.
For
Speaking of which, that's the other question I want to ask. So what happens is people see these incredible traders, they see their returns, and they're suddenly, well, teach me how to do it. Well, by teaching you how to do it, that means you take away my time of me actually doing it.
Oh man.
And this is the trouble that people get into, that yes, very successful traders don't have time to teach it to you, because if they're teaching it to you, how are they going to be doing it? Because there's only so much time in a day. We can't pause time. So, and this is what I try to educate people on. The more you start doing client support and working with people, the less time you have to focus on the market. So your trading tends to suffer. Your thoughts on this?
That's absolutely correct. In order to set up a business in the crypto space, legitimate business, you have to work out how the hell you're going to account for it, which is obviously the first thing on the top of my list as an ex-chartered. That's the first and most difficult thing. How are you going to account for it? How are you going to set it up so that it's all above board? Checking that you're not doing anything wrong, regulatory. You have to actually get the thing built. You have to deal with customers when they're coming in. You've got to pay people to do that because it's not realistic to deliver the service. You can't deliver the service all yourself. So it's not like it's just for free. In my time, if I was working back doing my old job, like I was sort of working on a board as an FD. So like, I'm not cheap, and I hate to say, it might sound arrogant or whatever, but like, if you want to learn, then it is what it is. And I think the price is reasonable. You can, for $30, you can just watch for $1 a day what I'm updating on the site, and that's reasonable price as far as I'm concerned.
Yeah, no, it's the same thing on my end. The resources, look, I have a few videos that one teaches you 6 hours worth of technical analysis, which is your basics. Another 6 hours teaches you risk management. And then I have an options course that's 3 days long. And that was a lot of resources. And no, I'm not going to be giving that away. And it's there for you if you want to learn. And if not, not. But with everything I do, I'd have to quit everything if I'm going to be a trader again, because I don't like the distractions.
Yeah, I mean, hey, look, we'll do a discount of like 50% on the site, and I'll share the code on my Twitter later on, and we'll do it to a limited number of people because I've enjoyed being on the show and all that stuff. So,
all right, guys, you heard it there. Just keep an eye on Phil's Twitter. Anything else? We have the chart of Bitcoin up. So final thoughts on Bitcoin. Where do you think it's going over the next 24 hours? Over the next few days to over the rest of the year?
I think it's most likely in the next sort of few. I think there's a good chance we're going to spend a little bit of time below here. I think there's a good chance we're going to come back and test this level. A lot of people who have been caught shorting this market at the bottom and panic selling, and typically when that happens, we need to clean those guys out of their position, and then potentially create another fear event. So, a nice W bottom. I don't think it'll actually get up there, to be honest. I think it's probably going to spend some time around here, as long as the dollar and gold and silver don't screw everything up. But all being good, I think if we do get back up to the 12,000 level, it'll probably be, the breakout to take us to 14K. However, if we lose the 11,000 level and we have a shitty daily close today, we could start looking lower. So I hate to say it could go up, could go down, but specifically, I am long at the minute, Bitcoin.
Yeah, I'm still long as well, looking for that 13 or 14K, but I still think that we'll close the year in the vicinity of 10,000, like I wrote in my first week of January article. Your thoughts on year end?
Year end, I definitely think we'll be higher than 10. I'd say possibly 15. So that's quite a big deviation, 50%. But
yeah,
also...
well, vicinity of 10. I mean, I think we'll be closer to 10, 11. I'm not really expecting 8 or 9, but somewhere around current price to me is the vicinity of 10,000. So I am looking for current price around year end.
Yeah, cool. I mean, as we know, you can only be wrong, or you can only be wrong or nearly right.
And an unreasonable amount of people will remind you every time you're wrong.
And that's true. I mean, people don't remind me too much, but I don't know.
Well, you're not wrong as much.
I don't know about that, but yeah. Anyways, thanks very much for having me on the show. I think it's been good fun catching up, and I'd love to come back on again if people weren't too bored of me rambling on. So
all right, cool. I just stole the screen share one last time to close us out. Hey guys, once again, we had Phil on the show. Check out his Twitter, his site. Everything is in the video description. I will be continuing to bother him about putting him on the website for the financial summit, which is now taking place in Bali. Over a year from now, unfortunately, in November, we want to make sure we don't move it again. Based on how the year end goes, I'll consider putting something together in the Caribbean. But all the time that we spend organizing these conferences and then having to cancel them all is just so frustrating. We picked the dates for the next Unconfiscatable. That would be in Vegas, April. Well, the conference is 23, 24. Poker will be 22. I just heard Phil plays poker, so we'll try to get him at that table as well. And 25 is just a fun day to hang out in that area. My site is, of course, Vays, vays.com. Check out the affiliate page. If you're a trader, check your jurisdictions. Yeah, that's about it for me. Thank you all so much for joining me on this episode. Love to have you on again soon, Phil. And saying goodbye from the beautiful Ojai Valley in California. Bye, guys. Good luck trading, and see you all on the next one.